So let's start with this high-level view of our journey to date and where we're heading. For over 25 years now, Righmove has been a leader in our core domain of estate agency and new homes, combined with an exceptional reach and connection with the UK consumer. We're powered by exceptional network effects, delivering great value to both partners and consumers, and we have a compounding revenue line for Righmove over time. We do have and are generating still vast amounts of data, close to 3 petabytes to date, and that keeps growing. There have, of course, been some big technological shifts and enablers through this period, all of them adopted by Righmove at some stage and turned into value, both externally and internally. In 2023, we outlined the opportunity to start expanding our role in the property ecosystem through the logically connected strategic growth areas. And at the same time, we accelerated our next-gen platform work to make it fully modern, faster, and AI-ready. As of today, it's clear to us that both our platform and the fast-changing AI landscape in general are at a place where it makes sense to invest and accelerate. We want to proactively cater to the opportunities and the technological changes ongoing and coming. It's not with an eye to the next quarter, it's a trained sight on the developments over the next 5 years. So from today, we will lean in and accelerate further, progressing strongly in our core engine and new growth areas, including the SGAs, and we will infuse AI into all we do. We continue to execute with discipline, high-quality approach, and indeed, strong shareholder returns. So with that lead-in, just a quick orientation to the 5 sections to go through today. First, a recap and scoring of the business since 2023. What's changed and how we now look upon the future opportunity. The areas of focus and execution going into that future more specifically. The financial strong outcome and long-term benefits that we generate. And finally, there's going to be conclusion, and of course, we'll get to Q&A. So let's start with a quick reminder. Our strategy is to develop the leading digital ecosystem for the whole moving experience, powered by exceptional data and network effects. So this strategic framework for growth and diversification that we set out before, and you all know, we continue to follow this framework, including the highlighted focus areas. A couple of things to note. Residential find, top left, is still very much at the heart of what we do, and that's 90% of our total revenue. For the other areas that we expand in, we have 2 principles. One is that they constitute attractive revenue and profit opportunities, and 2, that we build even further network effects back across the core business and platform as we execute them. Now, we presented these 5 Righmove business pillars to you back in 2023, and we have executed strongly across this period, both operationally and financially. We're definitely a more modern, more product-led, and more future-ready organization compared to the past. In the far right column here, you can see our self-scorecard summary marks for each pillar. We have done well on all of these, and in some, really, really well. Calling out only a few of the highlights in each of the pillars. For consumers, we have maintained a strong leadership position and traffic engagement metrics in a competitively quite dynamic landscape. We led with product and experience innovation, and we have had an upgrade of our brand and marketing approach. We've also added meaningful amounts of users more directly connected and relating to Righmove, all in deepening our relationships and again ramping our data sets. For partners on our core engine, we have delivered strongly across packages and products. We've also taken many of our partner interfaces and tools to the next level, and we are equipped with the best account management team in the UK, with great confidence in the long-term runway of our core business. The strategic growth areas, which were around 7% of revenue at the half year, as you remember, have hit the operational marks that we set alongside very good revenue pace. Results and learnings have confirmed the large market opportunities we identified, and we remain excited about the segments. Now, we did set out very ambitious and quite precise 2028 targets back in 23. We're continuously looking at the best long-term way to play in them. So whilst we see strong growth rates of around 20 to 30% as sustainable, our initial absolute targets for these will take a little bit longer to realize. Now, within platform, transitioning to the cloud of our production and data platform is a methodical, multi-year and complex effort, and in which we have made really great progress. Importantly, Along the way of this effort, we've delivered high-quality service, platform performance, and innovation. We're squarely becoming a faster, more resilient, and more efficient business. One we'll be able to innovate even more from. And lastly, and importantly, our people. The team has grown with many new excellent colleagues and capabilities, combining with the long and deep experience bench we have in place. We're better and truly technology-oriented team, and our culture and performance approach have strengthened. So my thanks to the team at Righmove for what I think is fantastic delivery in an ambitious, competitive, and dynamic environment. Now, I know there's a lot of interest in the 7% of our business that is strategic growth areas, or the SGAs. So let's just take a further look at those with a short video recap.
Building on the UK's leading platform for commercial property and transforming commercial search from the ground up. With improved search by sector and first-party data powering bespoke content, Righmove is positioned as the leading voice in commercial real estate. And by leveraging our commercial-specific property data, including over 50 new data points and full integration into Righmove Plus, we're giving partners the control to fully optimize their commercial listings. Also powering an entirely new user experience with a commercial-first property details page, including spaces and building amenities, putting commercial property firmly on the map. Righmove Commercial. Commercial property search transformed. In 2022, we built the world's first integrated mortgage in principle. Replacing a simple affordability calculator and targeting a fragmented market head-on, 2 years of testing, learning, and optimization later, we've achieved 15% more submissions from joint applicants, a 15% increase in accepts, and a 49% increase in consumers passing screening. All underpinned by a 230% increase in mortgage in principle submissions in that time. We took our improvements even further in 2025, launching Property Checker. Now, 60% of mortgage in principle applications include a property eligibility check. We're seeing a 46% completion rate on our new remortgage calculator. More than 120,000 home hunters have already used the first release of our enhanced affordability calculator. And we're making sure consumers can find our affordability tools wherever they are. We've embedded entry points right across the Righmove experience, from key landing pages to related tools, as well as inside their account. And we're just getting started. The UK's only true end-to-end rental solution, driving efficiency at every step. Before Lead to Keys, there was endless administration, disconnected systems, manual effort, and little transparency. Now with Lead to Keys, there's automation, centralization, and efficiency for both partners and consumers. Here's what our partners are saying about Lead to Keys. Designed to streamline the entire rental process, Lead to Keys is integrated with existing partner systems and accessed via Rightmove Plus. Powered by our first-party data, it features an up-to-date dashboard and gives compliance and progression reminders. Plus, a new renter checklist, giving tenants everything they need to move home. All driven by our trusted, connected, first-party data, ensuring accuracy and relevance for partners and renters alike, including the ability to buy home services in My Rightmove. Lead to Keys. Everything needed, all in one place.
All right. So as you can see, we're leading with product and differentiation. and we're growing our position in these markets, and we're definitely driving revenue growth along with it. Let's look at some of the very notable strong operational outcomes during this period. In commercial first, you can see the great progress we made across several key metrics compared to where we were just a few years back. We've also done a lot of foundational platform and data work in the background, fit for commercial real estate purpose into the future. In addition, it's worth mentioning that our share of time on site per Similarweb is now nearing our share in residential, and it is high quality. Over 70% of it is unique to Rightmove. Our share of FTSE 100 company real estate functions using Rightmove rose to 84% in the period. So our revenue growth is on a good compounding trajectory. We're now entering more of the product and package evolution part over 2026 and beyond. In mortgages, the metrics here similarly show the clear consumer interest and uptake of the MIP product. Affordability is very relevant for the 67% or so of all home buyers who need financing, and it's very obvious that they like Rightmove providing these digital, intuitive, and novel ways to help them. The 2x effect on overall site engagement by users of the MIP feature and the mortgage tools is very meaningful. It's a good example of a new consumer feature adding to the network effect for Rightmove. Meanwhile, of course, MIP users become better and contextually informed in their home hunting journey, and thus they also become more qualified in their subsequent agent conversations. We'll continue product development and increasing our ability to segment the huge user base for the right mortgage process and products, with nurturing paths and data loops with lender and broker partnerships. And lastly, for rental services, same thing here, very strong metrics, great progress in penetrating this opportunity. We double our volumes of enhanced leads, tenant leads, and with then a full digital product suite behind them to handle it, we're making life clearly more effective for agents. In late summer, we started to embed the two upfront part of Lead to Keys, which are the Inquire Manager and the Enhanced Lead modules, into many of the market CRMs used by agents, making workflows more effective yet again. And lastly, during this fall, we're trialing and enabling of those two upfront modules to more dual agents within the core subscription, something that will continue over the next year. It's an exciting penetration step-up opportunity, bringing efficiency to agents, landlords, and tenant applicants at true market scale. And for clarity, the other Lead to Keys modules will be sold separately, as they are, and over time, of course, to that enlarged base. So let's turn now to the core estate agency New Homes. Again, 90% of our revenue with a bit more detail. We delivered a lot here in the past 2 years. On the left, you can see our ramping product innovation pace for both consumers and partners. Often, we actually build to both sides directly, like we did with the Ascend package for New Homes. And many of our consumer-only features, which drive utility, frequency, and engagement with the site, also building up data signals that we use in future product builds, either for core partners or that can provide other monetization opportunities for us. We've delivered a number of packages and products to our core partners. We built market product segments like Agent Accelerator for brand new agents or Access for housing associations. And we now develop more tailored solutions to partner cohorts like multi-branch or corporates. On the right, with the Building Success Together program, we have continuously and meaningfully upgraded our business partnering toolbox and training support to the industry. The key outcome here is strong retention and sentiment scores. We're excited about the data-driven value creation and again, long runway of our core business opportunity. So now I'll show you another video. This is going to be of the OAV product, Online Agent Valuation. It's the latest and quite recently launched product for estate agents, which is going into roll-up mode. It's a unique digital product. It helps both consumers and agents in one go to save time and build a relationship. Plus, it's adding information about the most recent features and state of a property onto our platform. Tellingly of our times, it comes with an AI component built in from the start. OAV complements our existing suite of valuation products for both consumer and partners. And that's, of course, one that we built out quite meaningfully just in the last 2 years as well.
Introducing Online Agent Valuation, making accurate home valuations faster and simpler.
Vendors can add details about their home, upload photos, then submit their request, giving agents everything they need to provide a valuation. They can add a personal note and a link to their premium price guide before sharing their estimate. The vendor then gets an email and visits the agent's branded page. Here they can see their valuation and get in touch about next steps. Online agent valuation. Smarter, faster, simpler.
So, to summarize the business progress and what we've been up to, Rightmove's consumer-driven network effects are strong and are a powerful engine for growth going also into the future. The strategic growth areas have delivered against operational milestones with good financial performance. Execution and product development plans continue towards what we believe are meaningful revenue opportunities. And engagement with core partners is strengthened. We've upped the game on product and relationships and see a long runway for growth. Now, let's look forward. You also recognize this picture. It's important. We remain excited about the large and growing 10 billion total revenue pool in UK property and home moving services. It can undeniably be much better digitized, more connected, more efficient, and we do have a role to play in that. And as you might know, Rightmove just turned 25 years. So happy birthday, of course, but mostly we're excited about what we can do over the next 25 years. Now, what brought us here won't take us there. We want to accelerate into this. So again, our strategy is to develop the leading digital ecosystem for the whole moving experience, powered by exceptional data and network effects. We're guided by the vision at the top of our house. Our three business pillars underneath leverage and build the network effects. They create value for consumers and partners and definitely generating a lot of value for Rightmove. Note that what we call new growth here includes the SGAs, but the name also signifies that we have several ideas and opportunities in the hopper for the future. As you can see from the symbols across the house, AI has already taken a place in our home. It's increasingly gone into how we think, plan, and execute the entire business. So, let's do a very quick backdrop on AI. The truly big change in strategic context since we set out our plan in 2023 is the pace of AI developments. Massive amounts of money is invested across infrastructure for compute and in applications. Now these numbers are large, yet all in are actually forecasted to grow into trillions over the next 5 years. Consumer usage, from being served shorter answers and conversational interfaces in both existing and new platforms, has grown to very large volumes already. And there, of course, there are predictions of agents replacing or maybe complementing humans in any facet of browsing or buying. So what's the upshot of this? Well, for sure, is that the innovation cycle is on hyperspeed. There is creation, adoption, and growth at scale. Far from everything, though, is ready, mature, or high quality, as pointed out in many reports and, of course, discussions. Nobody can quite tell what the true adoption curve will be and for what exactly, but there's undoubtedly a real paradigm shift and a curve going on. So again, that is what we believe that being the fundamental context change for us since we set our 2023 strategy. So we're taking a balanced yet decidedly forward-leaning approach to this. We want to future-proof and we want to accelerate our business with AI in mind and in doing. The point is, this is not about today or even next year. This is about potential implications for consumer behavior, software, and property services on a 3, 5, 10-year strategic horizon. I would say probably the only constant over that time is that we all still will need physical homes to live in. But let's, though, consider the starting point for property, our sector, and for us. First of all, Rightmove has a phenomenally strong, over 90% brand awareness, 85% direct and organic traffic. Our experience is tailored, fit for purpose. There's a lot of contextual relevancy and built-up credibility. That deep specialty and aggregation is also what we deliver to partners. There are no signs of consumer disruption in any real sense of the word. Second, Keep in mind the consumer process of making it into a new home. First of all, it's a long and very comparison-oriented process. Comparing is actually not a necessary evil. It's something consumers want to do. 2, a home is a very heterogeneous product, and nearly 10,000 new homes to discover goes up on our site every day. They're comparable, sortable, discoverable on many parameters. That's also where these strong habit loops come into place. 3, the location of a home isn't something people just try to easily decide for with an online answer. They know quite a lot about where they look, and often they do it in real life. In the UK, the average moving distance is 5.5 miles. 4, a home is a big ticket item, whether you're buying or renting, and getting to one ultimately is quite complex. Since you're going to spend 2/3 of your time there for years, finding the one is important, and therefore the process is long, it's discovery, and definitely also opportunity driven. And finally, a home is a decision where emotion and truly personal preferences play a big role. With over 60% of households having more than one person, it's actually a double up of those preference considerations and the nurture process. So personal choice and comparison making is how people eventually get there. Powering up all that choice, comparisons, deliberations, home opportunities in the right place, at the right time, with the right tools, that is what our specialty is. And ultimately, it's done really well, and mainly through data. So, I think I've said this before, but I really do think of us as a data company. The data is scaled, it's connected, and to very large extents proprietary. If you look across all the data points here, you realize the power of having all of it with memory and learning patterns in one platform. Of course, LLMs have both started to democratize product development, and they really started to give really condensed and precise answers to queries for consumers. We have the advantage to also use the power of LLMs or AI applications, but we can derive reinforcement learning and sector-specific value with our live and whole market data set. We do not just hold static property data, we hold the UK's living map, property intent and behavior, signals for pricing, supply and demand dynamics, and geographies in our platform. Now, let me just give one example of how we leverage this with AI already now. We start with all that scaled proprietary and connected data. At the data modeling stage, we use off-the-shelf ML or LLM models in our data hive. And now we augment them with proprietary Righmove AI models. They're based on our much more contextual data. So for example, for our vendor prediction model, which feeds a few of our existing products to partners, we've seen over 50% higher accuracy doing this by applying our data models. And that is, of course, a very substantial lift. Over time, the model will build up into scoring engines for different entity sets, and we can use both models and engines for products. In this case, the AI-powered prediction model gets orchestrated and piped into existing product opportunity manager and discover, improving its performance for partners. This went live only 6 weeks ago, and over time, it's going to drive usage uptake, package migration, or spend ups as part of our subscription model. Finally, and importantly, these improved products will generate even more and new signals from both partners and users. And in a closed loop, there will be further adding to the data sets. That's going to drive new ideas about innovation down the road. It's a virtual cycle and indeed a compounding effect. So investing more in these AI power-ups of what we have drives reinforcement learning and value that simply otherwise wouldn't have happened. This is but one example of why we think now is the right time to go after this and doing it meaningfully. So, a little bit more broadly than on that half technical slide, AI is now becoming central to all we do. Internally, we will create, complement, and enhance all our existing capabilities and the workforce. Externally, from consumers and partners on our platform, we will connect, predict, and personalize to much greater levels than today. In short, we plan to be an AI winner. Now, we're building on an existing base of activity, and we have reported continuously on some of these. We now have 27 top-down prioritized AI projects and many more smaller individually built applications. And as you can see, they are right across the entire estate of the company. 4 external-facing ones went live just recently. Yet, what we see here is absolutely early stage. There's a lot of ongoing exploration that needs to happen, keeping track of that very fast-changing tool landscape, productionizing pipelines, data, and architecture, deciding what to buy versus build, figuring out how an opportunity that we have in the market or have identified might actually change with AI in mind, and when, and so forth. So with the fast pace of technology itself and also how search might evolve, we are convinced now is the right time to invest a bit of our very strong cash flow into this over the next few years. We leverage the position we have, we do it for future-proofing and for value generation. The value will manifest itself both in revenue opportunities as well as cost or productivity. I'll add very clearly that Righmove is out for quality, usefulness, production grade, security grade. Those attributes have made us a market leader. There will be things that we discard, but we'll learn faster. We wrap ourselves as usual in diligent assessments. We have financial discipline, and we have an always-on requirement to prove value in what we do. We're excited, but we're certainly not in the era of AI for fast PR drops. Concretely, our investment plans target 3 main areas. First, consumer innovation, in particular the app and AI-powered search, as well as progressing faster in the beyond find space. We'll create more utility, data loops, and monetary opportunity. Second, AI-powered operations, bringing seamless experience and productivity benefits internally as well as externally from our back office. And third, strategic R&D capability for new growth areas. With it, again, we'll deepen Rightmove's ecosystem role and value creation. It's going to be through revenue growth, it's going to be through operational leverage, and we aim to hit double-digit profit growth on a sustainable and truly long-term basis. We'll become increasingly fitter and opportunity-ready organization along the way. So, with that, I'll pass over to Tara, who will explain these 3 focus areas in a little bit more detail.
Thank you, Johan. And good morning, everyone. I'm Tara Lawrence, COO. Today I'm going to walk you through our plans across our 3 investment areas and how they'll benefit Rightmove, our partners, and consumers. I'm sure many of you here currently live in homes that you found on Rightmove. Our mission is to make the home moving journey easier and simpler for everyone. And that is something we do exceptionally well. Rightmove is already synonymous with finding a property, and we're extending our brand down the life cycle so that we become even more indispensable to consumers. This will unlock significant new revenue opportunities, which we are very well placed to capitalize on. We've made good progress over the last few years, releasing several new tools that support our users across the home moving journey, and many key improvements to the core search experience. But as Johan's just mentioned, the landscape is evolving rapidly. AI is raising the bar for what consumers expect, and we want to go faster. We're going to accelerate our progress, in total nearly doubling the product capacity that we have focused on consumer development. This significantly scales our efforts, allowing us to stay ahead of evolving needs, deepen our relationship with users, and accelerate the building blocks that will deliver new revenue. Everything we do to engage our consumer base provides value to our core partners, whether directly by driving more leads, or indirectly through enhancing the data signals that power our products, or creating new ways for our partners to showcase their brands. We know that consumer behavior is changing quicker than ever before, and we will be at the forefront of that change. We're going to fundamentally transform how users engage with our platform. First, we'll reshape our search, delivering a hyper-personalized experience that leverages AI and helps users find the right property faster and with greater confidence. This will include conversational search that, among other benefits, will create new ways for our partners to engage with our audience. We'll also deepen the connection with our users through property inspiration and insights, keeping our casual browsers, who are future buyers and sellers, on our platform. Next, we'll lean further into the home moving process, creating an assisted experience to support both buyers and sellers as they navigate the complex and lengthy journey. We'll continue to develop our suite of integrated mortgage features to help users better understand their affordability and financing options. And finally, we'll complete the life cycle with a curated homeowner experience. We've already built a market-leading instant valuation tool informed by first-party data that no one else has at our scale. The recent launch of online agent valuations, which Johan just showcased, provides homeowners further insight and confidence to take the next step through a fully digital and Righmove delivered experience. We'll continue to build out this space, creating a dedicated My Home area on the platform, positioning Righmove to be top of mind when homeowners are ready to sell, and delivering more leads for our partners. Our ultimate goal is to provide a world-leading AI-assisted experience, going above and beyond when it comes to property search and the rest of the home moving journey. To bring all of this to life, I've included an example of one of our new AI-powered features. Through Style with AI, users can transform any listing on Rightmove. It's part of a broader suite of tools that we've launched this year, all designed to help users understand the potential for home improvement, whether you're a homeowner or a home hunter. We want to be the place that consumers come to for all property-related decisions, to increase platform stickiness, give us even more data signals, and create those revenue opportunities that I mentioned earlier. Yes, it's a fun tool to play with, but through our early research, we found that over half of users who would use this tool are high intent, either visualizing if they could live in a space before progressing to a viewing, or assessing the property for renovation potential. As with everything we do, we've taken time to truly understand user needs, which has led to unique features like being able to remove furniture or adjust the lighting. And in the background, we've been trialing various models so that we deliver the best quality renders and reduce hallucinations. We want this to be a genuinely useful feature, so we've also included a real-time feedback loop, allowing us to monitor how the model performs at scale. And this, again, is a unique aspect of our tool. As I'm sure you all know, apps are incredibly powerful when it comes to platform stickiness. Once users download and start using the app, they're far more likely to return, stay engaged, and make Rightmove their go-to platform. What's really interesting is that users who use both app and web are our most engaged, driving twice as many sessions and generating 3 times as many leads. When searching for property, larger format screens play a crucial role. Users want to compare properties side by side, view detailed floor plans, and carry out in-depth research, all of which is often best supported on desktop. So going app only is not the answer. Our goal is instead to elevate the app experience we provide, so that whichever platform user chooses, they have a consistently great experience. Our first step will be to align the core search features across all platforms. Then we'll lean into device-specific features like offline mode and biometrics. And finally, we'll introduce app-only features. We know that our app plays an important role for our highest intent users, so we'll play into that, as an example, with new features that support the property viewing stage of the journey. Investing in our app now will strengthen our long-term position by increasing user engagement and enabling our strategy to move further down the home moving journey with our most serious users. Now, onto the second investment area, our platform and operations. For simplicity, I've broken up our platform into 4 layers. First, the proprietary technology that we've built to deliver our consumer and partner-facing experiences. Then, the underlying data platform that powers our entire business. Next, the back-office systems we use to deliver day-to-day operations, for example, for onboarding new partners or actioning product purchases and package upgrades. And finally, the technology infrastructure on which we deliver our entire platform in a secure and scalable way. We've been upgrading the platform over the last several years and are now well progressed in migrating to the cloud. We've built over 100 microservices within the experience layer, and this has led to a fourfold increase in code deployments in recent years. We now also have a unified data platform bringing together ever-growing volumes of data that we're generating every day. Going forward, we'll continue to invest in all these layers, but with two distinct focus areas. First, we'll invest in the operational layer of the platform, which has been a lesser focus until now. Here we see significant potential, and I'll cover this one in a bit more detail in the next slide. Secondly, we'll build on our early learnings and create an AI-powered developer experience. The goal here is to reduce cycle times, eliminate repetitive tasks, and enable our teams to deliver faster and with greater quality and consistency. The plan is to rebuild our operational layer from the ground up. For our partners, we'll provide faster and more digital service. AI will play a key role, delivering an intelligent and responsive experience powering all partner touchpoints, whether human or digital. Internally, we'll work more efficiently with streamlined processes and reduced manual workload. These new AI-enabled interconnected systems will also give everyone at Righmove access to more data and create new ways to improve the partner experience. But the work to modernize our operational layer is substantial, and again, we want to go faster. We're at the very early stages of planning and design, but I wanted to demonstrate just how transformative this investment will be for our partner experience. So the team have prepared a brief concept video that brings the thinking to life.
Today's property professionals have more competition, higher expectations, and less time. In response, we're building a centralized suite of tools to help propel our partners into the future. Agents will be able to manage all aspects of their Righmove subscription, as well as their activities, in a personalized dashboard powered by AI. This includes planning a prioritized daily to-do list, rapidly surfacing quality leads and property alerts, and sharing listing performance metrics. Let's take a closer look. AI Assistant, trained on our vast bank of home hunter data signals, makes insightful suggestions for better engagement. Agents can share listing performance data with home sellers to keep them up to date, build trust, and nurture the relationship. What used to take days can now take minutes. Agents can buy online and add new marketing products instantly. Additional marketing opportunities are automatically identified. For instance, when recognizing a brand hasn't been refreshed in a while, it suggests booking a design consultation with the Righmove design team to strengthen their brand and elevate their ads. Multitasking becomes easier for the agent. When someone calls, AI identifies who's calling, says which property they're interested in, and provides real-time conversation prompts and post-call analysis for training. No time wasted, just high-quality conversations. And while agents are out at viewings or valuations, we handle the calls they miss and build a to-do list for when they're back online. We're using AI to power efficiency, freeing agents to think big and create the partnerships that matter. The Righmove Plus of the future, built for agents, powered by intelligence.
This is an exciting step for us that will transform our partner experience and allow us to quickly innovate going forward. Our final area of investment will be to increase the capacity we have in our strategic R&D function. Until now, we've had a small internal team tasked with exploring new ideas. They have a keen eye on ROI, whether that be in terms of revenue, strategic benefit, or enhancing the network effects. And the bar for consideration is high. Some ideas are never taken beyond analysis. Others are stopped after initial pathfinding, when learnings suggest that the opportunity is just not significant enough, like we did in auctions a few years ago. Others have shown significant potential, and that's when we lean in. A good example is rental operators, which has scaled to generate around £10 million annually. We're in a fortunate position. We have so many opportunities we could invest in if we choose to. And so we're adding more capacity to explore ideas faster and create a larger pipeline of future growth areas. Many of these ideas are at very early stage and have competitive sensitivities, so we won't be covering the specifics today. But what I will say is that a key theme going forward will be exploring new wallet areas across the home moving journey. We see the eventual opportunity here both sizable and additive to the network effect. We will, of course, provide more details when an opportunity comes out of incubation and starts scaling, which we're committing to do by 2027. So to summarize, investing in these three areas will deliver significant benefits. For consumer innovation, we're aiming to double our pace. We'll significantly grow our app user base, strengthening our long-term position and delivering a great experience wherever a user chooses to engage. We plan to triple usage of our home mover and homeowner features, extending our relevance across the life cycle. And all of this creates new opportunities for our partners to engage with the largest home moving audience in the UK. For our internal operations, replatforming our operational systems will transform the partner experience and deliver substantial internal efficiency. AI will allow our technology teams to work smarter and faster, unlocking even more capacity to innovate. And for strategic R&D, as we extend across the life cycle, we unlock new opportunities. We'll double our capacity to research and test more of these in parallel, generating a strong pipeline of future growth areas. Ultimately, this is about speed, scale, and shaping the future, bringing forward initiatives that strengthen our position and make us even more valuable to partners and consumers. Now over to Rory, who'll be covering the financials.
Thank you, Tara. Good morning, everyone. Now turning to the financial considerations. To deliver the opportunity which Johan and Tara have just outlined, we plan to accelerate investment by approximately 12 million in 2026 and a total of circa 40 million over a 3-year period. Looking at the chart, this provides a split of the 12 million P&L investment. 3.5 million in consumer, supporting initiatives across the consumer domain as outlined by Tara. 2.1 million in apps, with a proportion allocated to short-term bursts to bring app functionality to parity with the web. 3.1 million in operations, which includes a new back office system. And an additional 2 million will be invested into new growth to expand ideation capacity and delivery, with the assumption that one or more initiatives will be backed with product and operational support, which we will provide details on going forward. Finally, we've included anticipated scaling support costs of 1.3 million across the business. The majority of this investment will be driven by headcount growth in technology roles and AI-related costs. The roles will mainly be in product, engineering, and AI. These figures are the P&L impact of the investment after capitalisation. Total incremental investment will be around 18 million in 2026, as we estimate around 6 million will be capitalised. This capitalisation will be in addition to our existing 8 million of internal labour capitalisation from BAU activity and will rise in line with salary inflation and applicable initiatives. There is significant rigour and discipline around our approach to investment. There has always been, and will continue to be, a healthy internal competition for capital. Every pound invested in our platform must deliver tangible business impact. We have embedded committees across Righmove covering AI, product development, revenue planning, and people. These groups are there to drive prioritisation, identify risks and opportunities, and ensure accountability to budgets and targets. Both Johan and I sit on these committees, which use tailored frameworks to measure success and guide decisions. For example, new initiatives are supported by ROI business cases, developed by the requesting teams, tested by the programme and analysis team, and scored using a blend of commercial, financial, and strategic metrics to determine investment priority. Some indicative examples of the level of internal scrutiny are set out on the slide. The committee frameworks feed into group planning through leadership meetings, quarterly reviews, and ultimately board approval. Importantly, we operate these structures in a streamlined, high-frequency way, allowing us to remain agile and responsive. The investment set out feeds into our main financial performance metrics: growth in revenues, underlying operating profit, and earnings per share. Starting at the revenue level, our execution has been demonstrated regardless of the macro or property market. At a group level, we aim to maintain our current level of 8 to 10% revenue growth through the investment stage to 2028, aiming to increase sustained double-digit growth by 2030. As today, that will be driven by growth in the core business of 7 to 8% through the investment stage and beyond. This will be underpinned by an exciting array of products, continually enhanced and extended by our experienced product development team, leveraging our world-class data and AI capabilities. On top of core, the investments made since 2023 in the strategic growth areas will continue to diversify our revenue and support our ambition of double-digit revenue growth. We expect the SGA to contribute between 1% to 2% of incremental growth to total group revenue. Together, we see a robust growth rate of between 20% and 30% as an achievable run rate going forward and into the long term. They're still on early journeys, and unlike core, they are unlikely to see a linear line of growth. But as Johan discussed, we are very excited about what these businesses could become, and we will not make short-term decisions that impact their long-term prospects. So in aggregate, core plus the SGAs should deliver robust 8 to 10% growth through the investment stage. But we want to be firmly in sustainable double-digit growth territory, which is why some of the investment outlined aims to contribute further revenue growth from new wallets or from existing areas. Moving to underlying operating profit, as I've explained, we anticipate a focused investment with operating profit growth lower in the early part of the period as we invest, then increasing as that investment begins to deliver returns, meaning we'll be nearer the higher end of the range towards the end of the investment period. As we look at our plans today, we see a floor margin of 67%. This is before any impact of the UK's digital service tax, which we would expect to apply once eligible revenue passes 500 million. We expect to see profit growth ahead of revenue growth again after year 3 as operating leverage kicks in for the initiatives outlined today. But our clear priority is sustainable underlying operating profit growth, moving from high single digit to sustainable long-term digit growth. That's why we haven't provided long-term margin guidance. Our focus is on profit, and we'll have options to deliver that growth through either cost efficiencies or using the operating leverage to grow revenue faster. Throughout this period, we will remain highly cash generative and continue to deliver substantial returns to shareholders. The share buyback program will be EPS accretive, adding 2 to 3 percentage points to underlying profit growth. Together with a progressive dividend, the business should be capable of delivering mid-teen returns annually through the cycle. Before we move on, a few words on nearer-term guidance. We've introduced 2026 guidance today of 8 to 10% revenue growth and underlying operating profit growth of 3 to 5%, which reflects the investment outlined earlier. These are both within the ranges shown in the middle of this slide and assume a stable macro environment and no inorganic activity. So turning to our capital allocation policy, this will remain consistent. Our first priority is investment in the business against the framework set out earlier. Secondly, we will continue to evaluate value-accretive inorganic opportunities. We would look at opportunities that accelerate us towards our strategic ambitions quicker or provide us with products or services that we couldn't build better ourselves. As with our organic growth, we have a disciplined and high threshold. Any M&A would be expected to drive incremental growth to that outlined earlier. With remaining excess cash, we will return this to shareholders via a progressive dividend, which will grow aligned to earnings growth and share buybacks thereafter. I'll now pass you back to Johan to wrap up.
Thank you, Rory. All right. So, next 5 years then, in headlines, what's changing and why? Well, with an eye towards the world playing out with a whole bunch of different changes, and we talked through them, we see things on the left here being very stable, right? We'll continue to drive progress on the back of our strong position in the market. We have opportunities and foundations in the context that we operate. We run a very strong and compounding business model. The themes of change and the opportunity are set out on the right. First, LLMs, applications, usage of AI are unfolding at pace. Someone said that AI today might be at the equivalent stage of dial-up of internet itself. Imagine what happened in the ensuing years. Nobody actually knows, again, what that curve of technology will evolve to, but we assume it will be rapid, and we want to be in a strong spot on it. Second, for Righmove, AI does become central and foundational for all what we do. And third, we are specifically investing near-term in consumer innovation, AI-powered operations, and R&D for new growth. We'll become an even stronger platform than we're today. We're going to drive strong total shareholder returns for the near, medium, and long term. And with that, let's turn to Q&A. If you could please use the microphones in front of you, if you have them, or we can get them, and press and hold the button to speak. And Rory will help to direct questions.
Morning. Okay. Morning, everyone. It's Jessica Pock from Peel Hunt. I've got three, please. The 8 to 10% growth you're guiding towards next couple of years. Just to be crystal clear, you're suggesting the core is, it's not a case that you're suggesting 8% to begin with, kind of rising to the 10% over the next 3 years. Is it that matter of actually it can be choppy next 3 years depending on how quickly the SGA is in a given year? The second thing I just want to ask in terms of the top line is, the three growth areas, I guess the less predictable one is the new R&D spend. So within that top line guidance, can we assume that you're probably not assuming anything that comes out of those new growth areas in what you've suggested? The second one is just on the peers. What are you seeing that they're doing on the AI front? Any colour around that would be good. And then the final one is, you've pushed the SGA kind of targets out further. Can you just remind us, what are the pain points that you've seen so far?
Sure,
Great.
First two.
Yeah.
Yeah. So look, the 8 to 10% absolutely is a range. We've delivered 10% in the first half. We've guided 9% at the full year. So we absolutely see opportunities to get towards the top end of that range, and we so may do in the investment period. We're giving you a range, like we have done for next year, because there might be some things that influence it. For instance, just the pace of what we want to do in terms of the SGAs, in terms of tailwinds or headwinds. Look, if we get a push in new homes developments, which we haven't had for the last couple of years, absolutely we'll be towards the higher end of that guidance. So it's absolutely a range. We think there's opportunities to get towards that within the investment period, but we're giving you what we think is a really robust, reasonable range for that period. In terms of the new growth, look, it has to be quite material to make a percentage impact on our revenue growth, given revenues are coming up to 500 million, and that's going to take a bit of time with these new areas. What we're talking here is not a product that will flywheel off core like the OAV or Optimizer Edge, and therefore, it will take a bit of time for it to come through, and that's why effectively that new growth will be incremental to effectively the current growth that we're seeing past the investment stage. And we will do everything to accelerate that and to push it forward, but we think that's a reasonable time frame from what we're seeing.
And sorry, the third question, if we get to that, I think. Yeah. AI and peers. So, yeah. UK peers. Yeah. Look, I think I can comment quickly on the overall peers piece as well. I think you actually have a bit of grouping of active players, and you have some that seem much less active. Amongst the many actives, and I know that you all track them, it's definitely a healthy ongoing activation. definitely classified still as I would say experimentation stage, right? Some great interesting pieces out there. I don't think there's anything that sticks out necessarily at the moment, at least. And it's in the UK. I would say it's the same thing. Supla probably a little bit more active than the other competitor on this stage, but no doubt everyone's looking into this, and also OTM and CoStar, obviously, they've just announced a bunch of things around this, at least in the US.
The SGA targets. So you had a question on the SGA targets. Do you want to repeat that, Jessica?
Just to remind us on the pain points of SGA so far. You've reached a lot of milestones for that, but the targets have been pushed out to the right slightly. So what have you seen which has challenged?
Yeah, maybe I'll start and you're going to chip in. I mean, I think that there's a couple of things with the SGAs to flag. If we take commercial as a good example, we've had some headwinds in that sector. It's been impacted more so than residential, but also we've made decisions for the long-term value, which we haven't wanted to sacrifice for short-term wins. And the example of that is that, as we grew customer numbers, you saw the fantastic growth we've seen since 2023 in that. Going forward with a price increase or a product now, for us, wasn't the right move. We wanted to continue to build that network effect, knowing better than anybody what a powerful network effect can lead to. We've seen that in residential. And therefore, rather than pushing on price and product now, continuing on that customer acquisition, growing consumers and growing customer side gives us a much better platform for the future. And so therefore, we were prepared to take that growth in commercial down a few percentage points. And I think that's an example within the SGAs that we are seeing all of these areas as real opportunities with large TAMs where we absolutely see our sales being able to play a big part of that. That hasn't changed. But what we aren't prepared to do is take kind of short-term wins to sacrifice that long-term value. And so I think there's a little bit of that in terms of us providing at that range of 20 to 30%, which, to be completely frank, we will be aiming for higher. Of course we will do. And I would like to say it's towards the higher end of that range. But that is what we see as a really robust, sustainable growth rate in those SGAs for the long term.
And I would just add to that, the 20 to 30%, of course, that's not the inflection point that was needed for the previous 28 numbers, but 20 to 30% is a very meaningful, 3 to 4x the core business. And as long as we feel comfortable with, of course, we're trying to push them very meaningfully forward also commercially, but truly we are looking at the long term. We talked about it, I think, on an ongoing basis, of course. And in some places it's like, we're doing this, great execution, but look, the opportunity might be even bigger if you think about it like this. And in some cases, you come up against some stuff that takes time that we simply couldn't have forecasted by that time. PEPs and sanctions, regulations that needs to go into all the machinery and lead to keys, as an example, right? But look, that's par for course in doing business, and I'm really happy about those growth rates and what they will lead to over time.
Will.
Hi, it's Will Packer from BNP Paribas Exane. 3 from me, please, as well. So firstly, to sort of frame the margin investment, we've obviously had a significant margin dilution in recent years already. We've had a 50% increase in staff. Should we think of it, the backward-looking margin dilution was catching up with where you needed to be and investing in the strategic growth areas, and now this is you proactively trying to get ahead of the curve? Or should we think of it still, some of it as catch-up versus peers? We had the last couple of weeks a busy results season hearing about products like HeyImmo, etc. Do you need to catch up to that? Second question, playing devil's advocate, why not have a much more aggressive investment in 2026 if we have such a fast-moving market backdrop? Just understanding a bit why the investment is gradual over the next 3 years would be helpful. And then finally, I don't think we mentioned ChatGPT in today's presentation. They're very important strategic decisions forthcoming. How much do you integrate when they launch their app integration in Europe? Are you planning on being a part of that? Do you have to be, because Zoopla will if you don't? How do you see that kind of risk reward and decision making? Thank you.
Do you want to do the first?
Yep. You can take the first.
We'll start with the investment gradual. Look, it's where we envisage it is the investment is pretty quick in the first year, and then it kind of stays pretty similar, growing very slightly over the 3 years. So it's not that we're investing and then continuing to increase that investment materially over the 3-year period, which is effectively why we expect to see underlying operating profit growth at the lower end of the range to start with, and then it starts rising. And so as we exit the investment stage, we're towards that double-digit operating profit growth. So we are accelerating and going fast with that investment from 2026. And what Tara has outlined as well is that investment is on top of the current investment that we're really happy with the ROI that we're getting across core SGAs and consumer at the moment, and that we are very targeted and disciplined in what that investment gives us. You heard me talk about the kind of frameworks and governance that we've gone through, and that will add us a lot of firepower in order to see what we want to do. There's some things that we'll get quicker wins with because that's the nature of that investment versus, say, a back office, which is going to be a multi-year time frame, and that's going to take time to implement, and then it's going to take time to see some of the efficiencies come through that. But we feel absolutely that the 12 million P&L investment is the commensurate value with what we want to deliver with this. In terms of the first question, in terms of is it a catch-up? No, I mean, look, I think like all businesses, we're continually wanting to invest, refresh, and evolve our business. And so, yeah, of course, I'm sure Johan would have wished that some of that was a bit more upgraded when he started, but I think that's the same for every incoming CEO. I think the investment that we outlined at this Capital Markets Day was specifically accelerating the strategic growth areas. We're not cutting back on them. We're really happy with what that investment will deliver. This is investment that we absolutely could have absorbed within our current margin profile, and we had that discussion. For us, that wasn't the right way of going this, because we want to do all of this quicker. We see that if we waited like that, then the opportunities wouldn't be brought forward and we would miss out, and us as the market leader wouldn't find that acceptable. And so for us, lowering the margin in a short period of time to be at the front of the pace for what's happening and being able to take the advantage of the opportunities, of which, as Tara gave some detail and flavour of them, we think are really exciting and varied, for us was the right decision. And we'll constantly look at margin as an output, as we've always discussed, about what is the right level of investment. But as I say, very happy with that floor of 67 for the investment period.
Yeah, and on ChatGPT, look, there's an overall premise here in that wherever consumers are, we're interested in getting hold of them, right? But also, very importantly, over 90% of them know about our brand, and we have 70 to 80% obviously of consumer time spent on portals. So there's an existing search engine, which is the biggest in the world, actually keeps growing, by the way, and it's not being replaced. People have used that to some extent, but they actually go and look for our brand. And 85% of everyone actually comes to us directly or organically, right? So we have a direct relationship with them already. I think a lot of that is very transferable to another medium where people might conduct some of their online activities, whether it's social media, which has turned into search in some instances, or obviously ChatGPT. Now, again, ChatGPT is powerful, right? It's very intriguing, of course, to see what they're doing, backed by billions, and consumer adoption, right? That goes for everybody. So if that makes sense for us to play in, we're absolutely open to that, right? Now, when we talk to them regularly, they're obviously not ready with their European sort of setup and SDK, but we expect that to come, and we will entertain that idea for sure. There's still things to figure out in terms of what the setup is and where we'll go over time and so forth, right? We also have very good, direct relationships with several of the US companies who went on the apps in GPT already on.
Thanks.
Marcus.
Oh, sorry, it's you. Sorry about this.
You press the button.
Clumsy, sorry about this. Can we continue on the AI? I'm sure you get this in every single meeting as well. We get this as well. I mean, the the concern seems to be that going forward, as you said, a large part of traffic might have a different starting point. You mentioned Google, and obviously that's day-to-day business today. But in the future, the risk is, as far as I understand it, that any LLM might not prioritize. And the inventory leadership that Rightmove has is not that large. It's a massive traffic leadership, but not necessarily inventory leadership. So the question is, if the starting point is different and it's not prioritized necessarily, isn't there a risk if the properties can be also found elsewhere that LLMs find it? So the question is, do you think about potentially limitations to what level of data you will give to the LLMs? Because at least the argument would be that if the search criteria or the search would be better experienced in let's call it ChatGPT, it might be harder to compete. So is it really that you just say, okay, it's let's wait, but we are open to give our inventory to those sites, whatever they will look like? If you give us just a bit more broad answer on this than what we just heard. And maybe two more questions. One is on the growth initiatives. I mean, obviously you highlighted that the proceeds will just come later. I haven't really fully understood why that is. Is it just that you feel with better tech it will work better? Is that sort of like the bottom line, why we should still expect the same outcome, just a bit delayed? And then thirdly, on the cost base. I mean, clearly Rightmove is a UK-based cost base company. A lot of other peers talk about outsourcing, not only software engineers, but also other areas. Is that something that is starting to get discussed internally? Where are we in this context when it comes to Rightmove? Thank you.
Okay, great. I'll start with the first one and also let Tara chime in, being close to this. I think what you mentioned, Marcus, is actually interesting. If I got you right, the fact that we don't have a huge supply advantage. We do have a supply advantage, but it's not huge. And if that is exposed elsewhere, why wouldn't people go there? I would flip it and say, precisely because there's not a massive difference in supply, and consumers go to us and keep coming to us. It's because we deliver what we deliver, for them, and then we built that repeat behavior. So I think that has, real longevity. But again, in a new way of searching or finding information, it might be complementary type of information. Then you have to assess how you interact with that, environment. Or again, if it's actually a little bit like you see on search overall, right? It's not that the 850 million weekly users on ChatGPT has just sucked that equivalence out of Google. Google reported 100 billion. A lot of it was cloud, right? But actually, they see search growing. But they're also obviously rapidly, sort of redeploying how they serve answers. Right now, it seems to be all boats are lifting a little bit because this is interesting. It's novel. It's another way of finding information. And I think that's parallel to what we do as well. First of all, having all of that content, and as I said before, I think comparison and actual visualization is extremely important. But then you combine that with all the very contextual, specific LinkedIn or logged on, etc. Features. Very, very few, Google included, Facebook included, who try to go into different verticals, actually get to that level of sophistication, right? Because they try to rule the world up here as the answering engines, and obviously that's for sure. I think what ChatGPT is absolutely about doing right now. I think they're extremely focused on growing revenue as well, but it seems to be very B2B oriented and driving user and consumer, right? We'll see how it shakes out over time.
So,
I was just going to add, I guess, two advantages for us that really stand out to me. One, the 25 years of data that we have that is just so much more than stock. And secondly, how deeply we understand what users want when it comes to property. We do thousands of hours of research with both consumers and partners every year. And as Johan said, we're doing so much more than search. What I showed you, every part of the home moving journey, we're starting to provide value and tools that help you. We're going to be the one-stop shop for all of that.
So Marcus, on your cost one, look, and I'll come back to I might need to clarify the growth one, but on the cost, that we continually evaluate our resourcing model. We've used contractors in the past where we wanted to accelerate and go faster. And there's always been kind of UK domiciled. Pre-COVID, we have used contractors outside of the UK. We'll always look at our resourcing model in terms of what's best, in terms of a measure of cost, but also efficiency and also culture. We'll always evaluate that. I think your question was just why is the new growth taking a little bit of time to come through? Was that the question? So the reason for, as I mentioned, is look, to make an impact on revenues of coming up to £500 million, it's got to be anywhere between 5 and 10 million, and that's just going to take time. And of course, we have products within core that can do that pretty quickly. But these new growth areas, we're not counting a product like OAV or Optimizer Edge within that, right? So that's just going to take a little bit of time to mature and get off the ground, which is effectively why we're saying that's past the investment period. Of course, we'll try and make it quicker, and we'll bring more details when we have. Giles.
Thank you. Yep, sound check. First question's for Johan. We sat here in, not this office, the office of your prior broker a couple of years ago, and I asked you, incoming, did you get everything you wanted from the board around investment? And you'd said, well, you come from a pro-investment cycle, a very pro-growth environment, but you respected the board's needs to balance profitability and growth. And yet we're 2 years later, and certainly suggested from Rory's earlier answer that there's a bit of catch-up here. So the question is, do you finally have everything you want to be investing in? Second question is on the Righmove Resistance Tour. So many leading questions I could ask there, but I'll leave it over to you to comment on how you see fit. But the one element coming out of that tour is that you're currently blocking ChatGPT, so a specific comment on that would be useful. And then finally, on the strategic growth areas, a very, very specific question about the mortgage in principle product. Is the launch of Eligibility Checker a tacit admission that there was a flaw in the original design of the MIP product?
Okay, I'll start with the first one, obviously. Thank you, Giles. Look, it was a pretty simple answer. I've always been and felt very supported by the board. So we're going to go into some of the specifics, but that was true then, that is true now. And of course, the board is, it's a really great board. They are challenging in our strategic thinking. That's where they had a lot of that piece, but at the same time, they're supportive of what we're doing. Then, a year ago, same thing now.
Blocking ChatGPT.
Blocking ChatGPT, yeah. You would take it?
Yeah, I mean, I guess, yes. I think, for us, it's very much, and I think we've covered it already. I think, we're open to conversations around integration, but we're also very focused on, what we're doing. And we see huge advantages. And, we're very confident that we'll continue to be the place that people come to search for property.
MIP product. Do you want to go the MIP product or me?
You go.
So I think the MIP product, I think, is one of just evolution. As we look at that mortgage business, it's still really nascent, early business, and we're continually to look at how we improve that value for our lender partner as well as our brokers and for consumers. And for us, that just looked like a good way of increasing the value, and that's what effectively was born from it. We've been really, really happy with the performance of the MIP. It continues to perform really, really well. I mean, we could have had a better market in the second half. But I think we'll continue to see that as we look to evolve that, because ultimately mortgages is only a business that's kind of 3 years old. And so, other things that will come from it as we learn that we want to adapt and change.
So there's nothing to read into the changes of leadership in the financial services?
No, not at all. David been with us for a long time, and Lydia's been with us for just as long, really. And so it was a nice change for her to come in and look after that. Joe.
Excellent. Thank you very much, Joe, from UBS. Three from me, please. So firstly, it feels like you're effectively not forecasting revenue from the AI investments in your guidance, and that's due to sort of conservatism, forecast uncertainty, and the time it takes for them to build. But when will monetization start, even if early, and which products should we be keeping an eye on from that perspective? Second question, we can obviously flow through guidance to estimate a net investment level for future years. But what we don't know is how much cost savings fueled by AI you're expecting and are effectively baked into that as well. So can you help us understand what cost savings you're expecting to get from AI and whether they're baked in? And then finally, on the incremental investment, you've spoken about what you're sort of producing with that investment. But what's the investment actually going into? Is this just people, or is there anything else that you're putting money into? A little bit of an understanding of that would be helpful. Thank you.
Okay. I can start with the first one, and then we'll roll on. So I think as we've discussed a little bit, we are trying to look at this from a long-term perspective, right? Both on the revenue opportunity side as well as on a productivity perspective. And on the revenue side, there are two kind of quite easy ways to think about it, which I think is true. One, you got to remember, we do have a subscription business model, right, at the core of, and we like a lot of the compounding aspects of that one. So when we, for example, enhance a product, potentially come up with quite a new version of it, pre-AI and certainly with AI, that gives us opportunity to move that in and commercialize it through package upgrades, depending on where we put it, right? Very similar, again, to the business model that we followed before. So for us, it's a matter of just like we do with product roadmaps, generally speaking, and we have ideas for many years, which fits within that sort of package structure and product model. So that's a compounder. Now, can there be very interesting, very value creative aspects because of AI? Potentially. And can that move the needle in a different way than it has before? Potentially. But generally speaking, you're coming back to that compounding subscription-based model. And then, of course, there is another side of it, which is AI driving product innovation, which is sold or commercialized in a different way. Even the MIP that we're doing, we've already actually infused AI into our own data sets, behavior on the site, to target consumers that we think would be interested in that tool with some aspect around it. And that's led to some of the conversion gains, right? So good example already. It's an additional piece of revenue. And for sure, there will be or we have thoughts about, that could be entirely new pieces around it. So it's a plethora of different things. I'm not going to say, here's X, Y, Z, and you should, expect that in 6 months or 12 months or 18 months. It will be a rolling cadence. We'll be very excited to talk about it, and we will keep you updated for sure.
On the cost efficiencies, listen, you hopefully got a feeling of how much increased productivity we can come from this business in the next few years, and that gives us a huge opportunity. Now, yes, that can provide us cost efficiencies, but it also allows us, if we should choose, to reallocate them to drive further top-line growth. We have an option to do either, and our preference absolutely is in the first most to drive higher revenue. Ultimately, though, the game is to drive underlying operating profit growth. And once we have done some of these things, particularly the back office and some of those operations, which is why it will take a little bit of time, we will really have those levers that we can pull. In terms of what it's going into, I mean, Tara, do you want to give it a flavour of some of the things that we'll be spending?
Yeah. So I think Rory already mentioned the bulk of it is on people, but also technology costs. Obviously, AI comes at a bit of a premium, so we factored that in. The back office, will involve introducing new systems, new capabilities, so there's some cost in that.
Andrew.
Thanks. It's Andrew from Barclays. I've got 3 as well, if that's okay. First one's on your assumptions on marketing costs over medium term. And I guess I'm interested both in the angle of what kind of take rate you may or may not have to pay to OpenAI, Google, etc., in a world of AI acquisition, and in the nearer term, whether you need to spend more on kind of GEO, because it would look to me like your visibility within ChatGPT on search results today is worse than it is on kind of traditional Google search with SEO. So curious on your view on that. The second question is to ask how much money you guys make out of kind of prominence or, premium ads, if that makes sense. And I guess the thinking I'm exploring is if in a world of AI, we're going to find our perfect house more efficiently, whether some of that kind of time spent or premium ad-based monetization is going to change, and how you thought about that as part of your midterm revenue. And then the third one is there were some good slides on there about kind of getting deeper into the workflow of the agent and helping them to do, a broader range of efficiency things. But I guess the question is, why not go much harder? Because it feels like there's this huge pot of money of people costs with agents that AI is going to help to automate, and you could benefit from that, but it could require much more investment than you've outlined today. And could that be an area of kind of inorganic focus? Thank you.
Okay, great. I'll do 1, 2, 3. So I think the question was marketing cost over time, and including to ChatGPT and the subhead of this. So first of all, today it's a pretty high degree of variability in terms of what results you get back, right? So it's clearly still immature, and mind you, way less than 0.5% of traffic. So that's where it is today. We expect it to evolve. Clearly, they're moving their positions forward as well. If you look at the 7 big US or global brands that they announced, we talked to several of them, as I said. None of them are doing it because they see all the consumers have gone there, right? It's in the interest of experimentation. It's quite a big effort. And they've taken slightly different tacks in terms of how to integrate, right? More of the full experience over there, or an early lead in, etc. It's just super early. So the point is to be able to play with this and figure out what the right thing is, and at the right time, and what your alternatives are. I think marketing wise, again, equally, it's like even more uncertain, right? Are they going to be focused on B2B and all of that, build a cloud or what have you, or are they going to try to monetize the consumer side? You could expect that, but at some point perhaps. But I think that's going to show itself. Same thing there. If you have a very strong brand and affinity, and you stay on top of things with the consumer, you don't necessarily have to pay a lot to another platform just because some people are searching there, just like it is for Google today. That's the position we're coming from. That's the position that we're intending to stay in. And that's part of what we're thinking about here over the next 5 years.
On the prominence point, Andrew, our package strategy really protects us from that, because effectively, we have an all-you-can-eat flexible product suite that customers can pick and choose from. And so what we see in cycles is some upweight in prominence products, like we've seen in the moment, where they're trying to fight for buyers. But in other markets, they drop that, and we allow that flexibility. And so if someone was to drop prominence products, they become less valuable. If you believe that, they'll sub them out because they've got a threshold to meet for other products, and there'll be other products that meet their needs. And we have a suite now of 30 odd across all different categories that we've built over our 25 years, knowing all the different types of markets and user behavior. So, the way that the package structure is charged and monetized, it very much protects us from that subbing out in that instance.
And then on the last question about why not go harder, I think the first thing is it's worth remembering this investment is on top of what we set out in 2023. We're already delivering more value than we ever have, and at a faster pace than ever. I mentioned earlier, kind of 4-fold code deployments. And through this period, AI is going to allow us to go even faster with the efficiency it brings to us. The video I shared earlier, the concept around where we'll take Righmove Plus as a result of the back office investment, plays exactly into helping partners be more efficient. And I think, as Johan mentioned, as we internally start to use AI more, there are definitely things that in the past would have been too complex, too cost prohibitive for us to do with partners or consumers. going forward, we expect that to be easier, and we will be exploring more opportunities there.
Thanks. Can I just follow up quickly, Rory? Just to confirm, there's no step up in marketing costs as a percentage of sales baked into any of the guidance?
No. Kieran.
Thanks. Yeah, it's Kieran Darling from Citi. First one, just in terms of the core business, could you provide us an update in terms of your thoughts around new packages? You alluded to kind of Optimizer Edge being your fastest selling product ever or package ever. How should we think about new core products in terms of the medium term guidance and how it's baked into that? Secondly, could you just talk on the underlying operating profit guide for 26 to 28? If you look at revenue, obviously it's 8 to 10, and then you give them 3 to 10 for the operating profit. So if we assume FY26 is rebased to 67%, are you implying that we could see further degradation of the margin in 27, 28? And what scenario might that lead lead to? And then just on mortgages, the focus was very much on the MIP product, but could you provide us an update on the broker offering that you guys alluded to in 23?
So look, I'll do 1 and 2, and I'll do them quickly because I'm just conscious of time. No, so that the revenue guidance is within the range of the underlying operating profit. We expect, as I mentioned in the script, to move up towards the higher end of that range towards the end of the investment period. That's because we expect to accelerate the investment from year 1, i.e. 2026, and that will be the first step up in investment. As I gave about 40 million over the 3 years, so you'll see a small addition to that, an initial 12 million. But as revenue will continue to rise in that 8 to 10%, we expect that underlying operating profit to move from the bottom end of the range towards the top end of the range. In terms of the core packages, look, really great to see last year the Ascend package taken up really well from developers, and haven't gone into ARPA, but it's been really exciting, the take up of that. The online agent valuation tool's been just out, but really positive and had great feedback. Both of those will underpin ARPA going into next year. OAV is going to be sold exclusively to OptiEdge customers, so we'll expect to see more upgrades to that top package, as well as those incrementally buying it above their package thresholds. As you know, we look at the package strategy kind of a 3 years out, and absolutely with the product guys already have a really long pipeline of exciting products, of which we will at the moment decide whether that underpins a new package or, like OAV, comes out by itself. And the main thing for you guys is, look, just seeing the strength of those products that have come out in the last couple of years, the fantastic take up regardless of competition or market, and we have real confidence and exciting about what is coming through in that core line in both new homes and EA in the next year or two.
Great. And on mortgages, I think a couple of points to this answer. One is that the MIP, as we've shown here, has done really well, and many aspects of that we've evolved over time as well, including the property checker, are actually complete novelties, right? We're bringing things that clearly a lot of our consumers are very interested in. So part of it has been a focus on that one, but we have been working with brokers, a handful, all along the way. We have quite a few conversations with customers or partners of all different sizes, and as we alluded to before, what we don't want to do, and some of the groundwork that we're laying is building the infrastructure to be able to connect to several brokers in parallel with obviously thinking about what is that broker path, the right broker path for consumers who really want to go to broker further up in the funnel, right? But actually building a layer that will make it scalable is something that again we've sort of said, wow, clearly we need to do that, right? We're not here to do one-offs, and we weren't explicit about that necessarily all the way back in the day, but not for any other particular reason, right? And again, grown very fast here. So
we're running out of time. I've had 2 questions. Annick and Sean, do you want to try, and we'll try and be quick. Thank you.
Good morning.
No, but you.
Annick Maas from Bernstein. I'm interested in understanding why you set yourselves on the investment budget that you've announced today. You could easily double it if you hear about all the investments that are happening in AI. So with that in mind, have you modeled what would happen to your revenues and operating profit if you were to double your investment today? And if you had a partner that would be coming along today and allow you to ramp up your investment even further, would that be something that you would be interested in looking at? Thank you.
I think we continue to look at the balance of investment and return on investment for that. As I touched upon, the governance we go through is incredibly detailed, and we're really conscious of every pound that we invest, what that does to the business and to our consumers and partners. We're really happy that the investment levels that we've outlined delivers what we think is in the best interests of our shareholders in the medium and long term, and we think it is a very sensible level of investment to deliver the returns that we can see. We will continually evaluate them as we've always done, but we see no reason for that change in the foreseeable future based on what we see ahead of us, and we think that investment gives us a lot to do, and what that can do to the business after the medium term is really exciting. So, the answer to your second question is no. If someone came across and said, "You want more?" No, because if it was that and we thought that was the best of the business, we would have done that now. We haven't, and we think this margin profile is right. Sean, last question.
Morning, everybody, and thank you for taking questions. I have about 10. I'm going to restrict myself to 2, just in the interest of time. Firstly, Johan, I wonder if we can take a little bit of a step back, and you're the third company in 3 days to set out a bit of a stall on AI, at least in the UK market. Can we take a bit of a step back and just ask, how do you assess the quality of existing sort of off-the-shelf AI tools versus the need at the moment to build much more bespoke models and agents for hyper-specific applications? And I wonder if you maybe talk about the sort of the thresholds for deploying AI in that sort of environment, if that is indeed sort of how you see it at the moment. I don't know. And then second of all, there are a lot of startups out there spending a lot of money on AI products. So inevitably the question comes, in addition to the investment you're making yourselves, do you have a budget in mind for inorganic opportunities? And any colour you can share there would be appreciated.
Okay. I'll take a crack at both. On the startups, indeed, I mean, look, the prop tech scene has always been full with many players. And of course, same thing holds true with AI in mind. I think one of the challenges for any startups, but I would say particularly in that space, I've actually looked into it from an investment perspective in my previous life, is that it looks like it's very hard to scale for quite a few of them, right? And that's just like a general comment. But there are interesting ones, and of course you can also in many ways get a company going very quickly today with the help of AI tools themselves. I think getting to that distribution is actually a real product as well, is challenging. To your question though, and we've said this before, we keep a close eye on that scene. We talk to a lot of them, and it could be potential partnerships, could be an acquisition, but generally speaking, our default roadmap is we run and develop this organically. So nothing new in that sense. I think on the first one, and Tara, please help me out here, and I know we need to finish up. We're chiming in. But to give a first answer, the quality of tools, etc. I mean, it's an incredible range. First of all, you have 9,800 of them, literally for any category. Okay, fine, a couple of big LLMs, right? That might be a handful, but it's a really wide range. And the other thing is that even the ones that seem to come to the fore, if you take code development, which they have GitLab, Cursor, Windsurf, and a couple of others, Claude, the names are starting to sort of stabilize. Even between them, right? It's like one takes a step forward, and all of a sudden that looks like the winner, and takes another month, and the other ones come back. And this goes back to my point before. We want to lean into this and really get the maximum benefit. That actually means being able to try and run on a couple of different tools, whatever aspect it is. But again, the variability in terms of does it really work versus does it look very cool, or how much do you need to change or reconfigure an existing process for it to actually work. That is very much still there. That doesn't mean that it doesn't work. There are quite a few absolutely, and we use quite a few of them already. But it's absolutely a dynamic landscape. I don't know if you want to add anything to that.
Just briefly, I guess, I think in your question was a bit around build versus buy. And as a technology company, before AI, we were always having that debate. And for us, it comes down to kind of cost, quality, how quickly we can do something that sort of shapes that question or decision. And that hasn't changed. I think what I shared with Style with AI, the new feature that we've launched, there is a product out there that others are using to deliver the experience. We found we could do it a lot better doing it ourselves. So in that case, we chose to build a model.
Appreciate everyone's time. Sorry we're a bit over, but thank you very much for today.
Thanks, everyone.